Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Today we're going to have a look at the 10th COT report of 2017, and as usual we're going to start off with the changes in commercials positions. So here we go. As you can see, we've got the New Zealand dollar on top of our list with a 31% change in commercials positions, 32 in large speculators. You can see these are huge changes, much larger than average, but we do see similar changes in the past. Commercials have just gone from a net short of roughly 5,000 contracts net short level up to about 2,500 contracts net long, and large speculators more or less the opposite has happened over there. So this is a strong bullish COT change signal coming after prices declining throughout last week. If we open the 5-year chart, you can see the extreme situation right now, which is more or less in between these two extremes. You can see the last major big huge extreme was this bullish one back over here mid 2015, which was a little bit early, but you can see that afterwards, a couple of weeks later, it eventually started pushing prices higher. Now we see a bit of a decline happening, but the COT change signal is definitely would push prices a bit higher in the near term. But the COT Extreme, well, that's not too helpful for us right now. So I wouldn't say that it's so easy to determine anything from that side. So let's move on and have a look at the S&P 500, where we have a 26% change in commercials positions. This is a much larger than average change size. We have seen even greater back over here. You can see in 2016 we had a large change over there. It is of course a bearish COT change signal. Opening the 5-year chart, you can see that we are moving towards the bearish side of the market. Of course, we're not surprised to see that after such a increase in prices. So stress levels are building up. They're not at those extreme or all-time extreme levels yet. You can see that there's still some space left to reach those levels, but it definitely shows us, the COT report shows that stress levels are definitely getting much higher. Another index is Russell 2000 on our list. We have an 18% change. Interesting to see a bullish COT change signal here while we had the bearish COT change signal in the S&P market. Commercials have just gone above the zero line, barely above the water, meaning they're net long, and large speculators have became net short. Opening the 5-year chart, you can see that here we have a different picture. So you can see that we had a very large significant bearish COT extreme without any effect on the market. You can see that. And now we're going towards, or traders are changing their positions such that the extreme is definitely going towards its bullish extreme, which is very interesting to see, having prices gone so high. So that's interesting. Let's move on and have a look at large speculators COT Extreme. We've got softs, 3 soft markets to analyze, starting with cotton with an all-time COT Extreme in large speculators. You can see it over here. So this is we've been talking about the cotton market for quite some time now in the past few weeks, because it was on the top of the list many times. And you can see, and I was telling you, you might remember back over here, I was telling you that you should be very cautious, because technically speaking, it's interesting to see an extreme which is pointing downwards, or giving you a hint that the market is going to fall, while not long ago, before that signal, prices were even higher. So now you can see that we've broken those levels. Prices could go even higher from that top over there, and who knows how long this is going to continue. One thing's for sure, the stress level in this market towards the bearish side is definitely building up. Of course, these extremes can widen for many weeks before we reach a top, so that's something you should keep in mind. Our next market is cocoa with a 721 report extreme in large speculators. We have 254 report extreme in commercials. This, of course, is a huge bullish COT Extreme, and we're not surprised to see that if you look at the chart that what Coco has gone through in the past 5 years. We're definitely not surprised to see such a bullish COT Extreme happening. So I think this is a good opportunity. Of course, timing is always the big question, but if you're a long-term trader, you might start building up your long positions here. And you can see that the last time we were at such levels was just before this rally started, and maybe a good opportunity again. And the last market for this review, sugar, with a 46 report extreme in large speculators. So that's not a significant extreme. You can see that. So what we can see from the chart is the last major extreme was this bearish one, which was present in the market for quite some time, but eventually you can see it had its effect on the market, and from there you can see there was a significant and dynamic decline happening in sugar. So how long can this continue? That's a big question, of course. Well, one thing's for sure, bullish extreme levels are still far away. Of course, there may be a relative extreme. You can see an example over here. So it doesn't necessarily have to reach an all-time or close to all-time bullish COT extreme level to end a decline, a fallback. But of course, that would be a more obvious picture for us to act on. Okay, that is going to be all for this review. I hope you enjoyed it, and I hope to see you next week. Have a great weekend. Take care. Goodbye.